We are getting ready for a kind of a crazy day in the markets today. It's been a little bit up and down. There's obviously a few things kind of impacting the markets we're going to get to today. Netflix being one of them. Some big news out of Netflix, just kind of shaking things out in the market this morning. And we'll go through a couple more things. Netflix, Tesla, kind of the semiconductor chip kind of area right now. What's going on with that? We're going to talk about Apple a little bit, Lululemon, and just kind of give you guys a market update as well on a couple things that I'm looking at and tracking. So let me share my screen and we'll get into this. For those of you who have already gone through the training with me, thank you for being here, checking it out on the replay. For those of you who are watching for the first time, maybe in the Facebook group, this is the first actual live coaching call that I'm going to share with you guys. So hopefully you guys enjoy this and enjoy some of the stuff we talk about here today as we go through this. So what's happening here is we are looking at the QQQ, and tech had a kind of a rough start to the day. And we're going to get to the Netflix kind of impact on the market. But what happened was QQQ had a nice setup yesterday, looking at the candles here. And just even if we switch it back to the line graph, like we're kind of bouncing off of the 50-day moving average, which is this yellow line here. And we're kind of bouncing off that, having trouble getting through. I thought yesterday we had a nice, big, strong kind of touch and go candle here where we kind of went lower, got pushed back up. I thought that was a good signal with yesterday's candle, big candle out there, like an engulfing candle almost. We're going to kind of break this today. And you can see that we opened a touch higher, and we tried to earlier in the day. If I zoom in and go with the 5-minute chart, I'll show you guys what I'm talking about. This is the pre-market here. We opened up around here around 347, right? And we kind of have been selling off ever since. There's a reason for that, which I'm going to get to, like I said, in a second. But I thought we were in good shape to break this level. Maybe we're going to retest and kind of go back down to this 340 level if that holds. Maybe we get enough momentum to kind of push higher up into the end of the week or next week. We're kind of been range bound, like I said last week on this call, that you guys who read and saw it, we've been range bound between 340 and 370 for an extended kind of period of time, almost start of the year here. So we need to kind of break through and kind of get back to this 200-day moving average and break ahead. We tried once, couldn't hold it. Tried twice, or actually 1, 2, couldn't hold it. So that's the kind of the area we're looking to break above before we get like on a face ripping mouth back up to all-time highs. And that could take a couple months, but it just remains to be seen. We are in earnings season right now, so things can happen quickly in earnings season, given the volatility, what's happening, given kind of the influx of cash around the big earnings dates. Big tech is kicking things off later next week. Tesla is reporting after hours tonight. We're going to talk about that a little bit as well. So things are gearing up. Things are getting kind of ahead. And maybe this is just kind of a little rest pause before we kind of kick things off. And maybe Tesla tomorrow kind of takes us to the next level. But right now we're looking to break the 50-day moving average on the daily chart. And if we can do that, then we have a nice kind of range up until this area here, right around 352 first. And then I'd say the next kind of barrier with the jump is 355 for the NASDAQ, for the QQQ, yeah, NASDAQ. And then after that, we have this gap here. Okay, we have a gap in between this candle here and these candles here. So it's going to eventually come back and fill this area in with some candles. When that's going to happen remains to be seen, but the market doesn't like gaps. You guys have probably heard me say that before. This will go back and get refilled. We're going to have to fill this little gap here first. I was hoping that was going to happen today. Did not. We got rejected back down. That's okay. It happens. So hopefully we can pick support off 340, go back up, get through this little kind of tiny gap, jump into the 350 range, and then go back up and kind of hit that 355 to 360 kind of range, fill this gap in here, and move higher up towards 370. That is the QQQ. Let's just talk about Netflix here now. And earnings came out yesterday from Netflix. I don't trade Netflix myself, but it's important to understand and follow them because they can have a big impact on the market. When we talk about the FANG stocks or the big tech stocks, Netflix is included in there along with Facebook, Apple, Amazon, Google, and Netflix. And honestly, like after this, they're probably going to get taken off. There's been like kind of shuffling and talks about something else jumping in and taking over the end spot, the company NVIDIA, but we will see if that happens or not with the mass public. But they had a 25% drop in share price after hours, and that's actually kind of been impacted and increased to about 35% today, 37% now. You can see here This is where the candle closed yesterday. Earnings report came out, boom, huge drop. And we had a further sell-off today. Like I said, we're down about 37% intraday. And like even where we opened the day at today, there's been a steady kind of stream of selling, and just from market open today, it's already sold off 10%. So if you played that correctly, and there's two ways you could have done it. You could have shorted it, or you could have bought puts. You would have made a lot of money because it dropped over 130 points in a single day. So the question remains then, where might it stop? And we'll go through the earnings actual statement in a little bit. Let's go through to the weekly chart because we don't have any support anywhere else close by. This is a crazy like area to sell through. Like 336 was the main area. Then you had one at like 290. Then you had 253. Okay, we're just going back to the lows, back as far as we have to get the lows. Then we have 236. Like it ripped through all this stuff. Some big volume kind of bars that just ripped right through it. And we're getting down into right here, which is a low of 221. We're below that now. So if this keeps on trucking, we could see something like 202 down here, catching support on the top of this area right here. Like it kind of just based around here, then kind of exploded higher, but it could catch support there at 202. It could break further down below that. If it goes below that, geez, it's hard to tell when this thing's going to stop. It got absolutely destroyed on earnings. Maybe around here in the 165 area, maybe around here in the 186 area. So there's a couple of different areas there. This could catch support, but this is not something that I want to be involved in. And the reason that I don't trade Netflix myself, there's a single revenue stream. I don't like companies that have one revenue stream, because if somebody else comes with a better product, better system, better way to integrate into society, they're going to struggle. And like Netflix has competitive advantages. Okay, they can go after like a different audience class than maybe a Disney or an Apple or an Amazon Music. They can do it differently. They can have R-rated content. They can have bigger kind of ad spend towards those kind of things. That's all they do. But it's not enough to kind of overcome. People are still kind of like going for different streaming services and kind of getting all of them, or just kind of shifting around. People are sharing passwords with others. They're not capturing enough revenue, and they actually lost subscribers lower than their estimates this quarter, which is a big reason for the earnings drop. If the numbers weren't terrible, we go through the numbers, okay? They earnings per share, they made money. They made 7.8 billion. It was a little bit lower than estimates, but what really crushed them was 200,000 people left, or they gained 200,000 less new subscribers than they wanted to. Okay, they expected 2.73 million, and they only got 2.53 million. So at the end of the day, they're still growing their subscribership, but they haven't had a negative kind of miss on this front in over a decade. So if the rate of growth is slowing, it means other kind of companies like Disney, Apple, like I said, like I talked about, are kind of chinking away at the armor that is Netflix. And this could spell kind of like a new trend for the company. So they're going to have to do something to kind of kickstart this and kind of nip this in the bud. Otherwise, this could become a recurring issue. And it has been reflected in the stock price that people are worried about this. People have selling off, and this is a crazy sell-off from the start of the year, or in November. It's just been on a rip. Like from the all-time high, it's down 70%. So I wouldn't have wanted to be the person kind of holding the bag at 700. That would have been a tough one to stomach. And at what point do you cut your base and run? Because I don't know how long it would take to kind of get this one back up there. It would take a long time, probably talking years, to get back up to that 700 level. So that's Netflix. And what we did see is that it had a negative effect on the market. Okay, Netflix is part of the QQQ, and like I said, the QQQ started the day really, really strong. Like it was up a little bit, and then it kind of sold off. And we're into the daily chart here now again for QQQ. Right, we started up here, we sold off. Well, it just happened to be like kind of Amazon's kind of weighing on things, weighing everybody down. Same thing kind of happened. Okay, all this negative kind of selling happened. There's a little bit of panic mode that goes on in the markets, and there's a good amount of selling off, even when things are kind of headed in the right direction. And now this is a great opportunity for those of you who are out there selling puts, who are using options. If you're investing in great companies, anytime there's a pullback like this, it just screams like there's an opportunity here if you're willing to take and execute at a desired level. Okay, and I'm not going to give you like what trades to make or what to do, but there's the companies we're going to talk about that are kind of primed for breakouts, and we're going through them and take a look at them. Obviously, you guys have to trade your own way and pick your own levels, but there's opportunity out there when something like this, like an external factor like Netflix, bring the market down and give you kind of an opportunity to get in with a little bit more premium involved. It also kind of confirms just like there's added volatility around earnings. Like if this news broke during the year and it wasn't around an earnings announcement, it just happened to come out, the sell-off probably isn't as substantial, but everybody knows earnings is this day. Everybody's watching the news. Everyone's kind of jumping on to what's happening, and just everybody piles on and it just crushes the stock when something like this gets reported. We saw the same thing happen with PayPal and Facebook in Q1. There were earnings reports out. I'll just add Facebook to this list here real quick, and we'll go in to take a look at that. Back in Q1, right, we had earnings announcement. Same kind of thing. Numbers were less than what they expected. Boom, sold off hard. So that's still kind of the environment we're living in right now. If earnings aren't great, if forward guidance isn't great, expect large scale sell-off. So if you're not comfortable with that, if you're not comfortable with positions being open throughout earnings, close them off early or just don't trade around the earnings dates. But there is more premium available, so you have to kind of weigh the two at the same time. Okay. Facebook was jumping. Oh, it was setting up nice too. It broke the 50-day, came back, was riding it the whole way down here. Broke it yesterday, was primed for like a nice little move up, and then boom, we have this, and the market kind of gets way down. It happens, and just a good chance to re-enter if you believe in Facebook, in my opinion. Moving on, we've got Tesla, and I know people kind of don't trade Tesla very often, or it takes a lot of capital to trade Tesla because of the high price point, and that's one of the reasons why there's been rumors of another stock split for Tesla. Like they had one a couple of years ago, and it was great. It kind of rebounded and it's run back up. So maybe there's another one coming in the future, maybe not, tough to say, but the price point is somewhat unattractive right now for the EV giants. But they have earnings tomorrow, okay, and they've been weighed down by this too. They've kind of like the market's been selling off basically all day, and there's some that are kind of winning in here that you see, but not too many, and it's mostly just a red day for a lot of companies. But they have earnings today after the bell. Elon Musk tweeted out today that he's going to be on the earnings call, which just kind of adds to the volatility of what could happen based on what he's going to say on the call. It could open things up, or it could cause a huge upward movement, huge downward movement. Depends what he says. If he kind of has plans for the future, if he's going to add to the guidance, if the things are good. Like I'm assuming it's going to be a good earnings call. Generally, Tesla has good numbers and they report well, and generally the stock tends to jump after earnings, but it's not a guarantee. So I'm expecting big things, and for it to kind of use this as a catalyst to kind of move and break above kind of this 10 or 1150 range. If we can break above that, we're set to kind of move back into all-time highs. If we break kind of below this, let's call it the 50-day moving average, like the 930, even the 890 range, like that's going to just lead to another decline all the way down, probably into the 800 range. So whatever way the earnings kind of call goes tomorrow, I think we're setting up for like an extended run in that direction. Sorry, the earnings call tonight, what the reaction is afterwards and tomorrow morning at market open. We're going to see a jump in either direction, and whatever direction that it moves, I think that's where we're going to end up heading long term for the next few months. Like I said, the other thing is that Elon Musk has been in the news a lot about talking about Twitter, and so when he's on his Tesla call, and if he mentions anything, that could also have an effect on the Twitter stock. And you can see, if we're talking about Twitter, this jump here was when the whole Elon Musk is buying Twitter, approved to the board of directors kind of thing came out. And you see that the stock price jump, okay, like a huge move for Twitter. It hadn't seen that kind of action since back in November, back in October with these kind of earnings reports. Like it was like another kind of mid-tier earnings kind of announcement that it was happening. And it's kind of been in these big volatile swings since then. And now we have this kind of call tomorrow or today for Tesla. Elon's going to say something. If he says something about Twitter, that stock might jump. Okay, it's been basing here nicely. It hasn't gone underneath that 44 level. Not a company that I want to invest in right now, but it's just, it could be impacted either way. And if you see kind of Tesla running tomorrow into it, it may kind of filter into Twitter, just like Netflix filtered into the rest of the markets here today. So just wanted to share that with you guys, keep you guys up to date on the announcements going on in the whole world of Twitter, Tesla, the Elon Musk environment, something that we all need to be kind of aware of what's going on as we move through this, okay? Next, the kind of chip area, the chip factors. I don't know if you guys track any semiconductors, but there's some companies that I like to track: AMD, Nvidia, just kind of have on the watch to see what's going on. And one other chip maker in Europe today, ASML, they beat earnings forecast and had increased bookings. Okay. And why is this important if they're in Europe? Well, we can use this to kind of give us a forecast and a guide to how it might trickle down for AMD, for Nvidia when they go and report earnings, because they are coming up and they will kind of hopefully have the same trend. It's just like if we look at the banks who have already reported their earnings to start, like JP Morgan's was mixed and they dropped. Goldman Sachs was great. They've been crushing it. Okay. We kind of take cues from the banks. Bank of America was really good. They've been crushing it. And we kind of apply that and say, okay, these things did well. Hopefully this bodes well for the rest of the markets. We kind of take cues from different companies. And if they're in the same kind of industry and sector as the AMDs, as the Nvidias of the world, we can kind of make that assumption potentially in our minds that if they beat and there's good reasons for beating, they said in here that they have bookings, their bookings are going up, their growth numbers are forecast are 20% unchanged, which is good. It's either unchanged or better. We want to see, we don't want to see it being decreased for full year kind of growth. And then we had order backlog, okay? Catch up to an order backlog. When there's a backlog of demand for something, that's great for the company supplying it. It's no different than the real estate market, right? If you have a house and you're looking to sell it and there's tons and tons of buyers, but very, very little supply right now, and you're one of the people holding that supply, you're holding the house that's for sale, or you have this company supplying these chips and everybody wants them, but there's only so many that go around, the price goes up, the value of that asset goes up. So that's a good thing for these chip companies, just like it is in real estate. And I expect this to kind of filter down and see the same kind of results for the AMDs, for the Nvidias, for the other tech companies or chip companies that are out there, semiconductors. And I think it's just going to be a good precursor. And the ASML kind of just jumped today in the market. It was up 2.5%. It's kind of been dropped down as well. It had a nice big jump up early on in the trading session, right? Up about 5% total, and it's dropped down to now about 2.5%. But it did have a nice pop after earnings, after a nice earnings beat, and now it's kind of being kind of sold off with the rest of the market, or people are taking profits, whatever. So I expect something similar to happen when AMD reports earnings on May 3rd. Nvidia is coming up on May 25th. And you guys haven't kind of used TradingView before, this is the program that it's free for anybody. If you want to go set up an account, just go to tradingview.com and you can create your own account for free. But that brings me to kind of AMD, and we kind of drew these in last week. They've been kind of in a little kind of range bound area as well. And it kind of broke to the downside to finish last week, which wasn't great, but it's now picking off support around the 94 area. And even a little bit below that, we dropped all the way down to 92. So it's kind of at the point where it's either going to bottom out or it's going to keep going. I think earnings are going to catalyst it upwards. Okay, we're kind of basing in here now. We're basing in here, and we're going to kind of jump up and kind of hit earnings. And I think it's going to be used to move higher. We definitely have a number of support here across this level, and we hit it actually a few times back. If we go back a little bit further, even we've kind of been all over this area. 1, 2, 3, 4, 5, 6. We broke through it there and went on a rip. 7. Now we're back at it for number 8. So I think if this area ends up being like this, where we have a nice strong earnings break like we did back last July, it can be a nice little run up, and we kind of get back to that area around 50-day moving average around that 110 area. I'm hoping so. I own shares of AMD, so I'm just holding and waiting and just seeing what happens. But a lot of volatility around earnings dates. So if you want to take advantage of that, earnings is on May 3rd. There's the levels you can kind of hit, and you can go about taking advantage of it that way if you want to. Just kind of go a little bit further out of the money, because there is some volatility out there if you do want to go trade and pick your own strikes and expiries and all that stuff. And so that brings me to Nvidia we talked about. Let's talk a little bit about Apple, okay? And I wanted to share Apple with you guys today, just because seasonality is kind of kicking off for Apple, even though we had this nice run up here in March 16th. From March 16th, sorry, to end of March, there was a nice little run up. And like I said, the seasonality for Apple, the chart looks like this, okay? It's a pretty sweet seasonality chart. Like honestly, it's huge. There's a little dip in November. There's a dip in mid-December, and then the rest of the month is just awesome. And there's a dip in July, and there's a couple, but like from left to right, that's what you want to see on a chart for just seasonality. Like it just goes up in value historically over time, which is great. We are right around this kind of area in April where we do see that kind of run up in the beginning half of the month, which we haven't seen. We had it in late March, which is kind of on par with seasonality. We didn't kind of get the face melting rip off in the first few days or first half of April. Usually there's a nice big run up into earnings. We haven't got that yet. Will we get it? This could be the start of it. It looked like it was primed to kind of bounce back here. Maybe we get it next week running into earnings. Maybe we don't. What I also wanted to kind of highlight for you guys is that not only is it just Apple's kind of earning like seasonality, like good time for Apple, but it's also like, we talked about this as well. Seasonality for the tech area is April 15th and July 17th based on equityclock.com. Okay. You go there for free and check this out too. April 15th to July 17th is strong for technology. Okay. So we're right in that sweet spot. It's and Wednesday, April 20th, we are ready to kind of bust through this and just kind of figure out a way to get higher and kind of break back towards all-time highs around 182. From an actual technical kind of chart pattern area, I wanted to show this to you guys today. This is called a bull flag. And what it looks like is we have this kind of nice kind of rip up here, okay? That's kind of the flagpole, this initial kind of move. And this was a crazy runner. Like I didn't catch this really at all. It was like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11-day ripper. And it's at some point there's got to be kind of profit taking. There's going to be a pullback to kind of take some profit off the table, so take some risk off the table. The sellers are going to win out at some point, and that's what happened here. And we're seeing now this is the flagpole. Okay, if you think about a flag, and then over here is the flagging pattern. We just draw this in just like that. So if you think about a flag and what it looks like, not exactly like a flag, like we would kind of expect like this, but that's kind of the idea of what we've got here. And what it means is that it's just kind of taking a breather and looking to bounce higher. So once it's out of this kind of range here, we're looking for a break to the upside. If it does break through this kind of top range, and I thought like today would have been great if it had some momentum behind it, the market didn't sell off. It opened up here, like right at the top of that range, could have just busted through and moved higher. It didn't, that's okay. But we're looking for it to kind of do that and break above this kind of bullish flag. And kind of the longer it kind of stays in this range bound, the stronger the move's going to be. You see it break above, that's kind of the signal when it's going to kind of go for a rip. So I just kind of wanted to share this pattern with you guys today, just to kind of keep you aware of it. And just, there's always kind of things you can look at and learn and add to your repertoire as a trader. I didn't know these things when I started out. I was just kind of basically going on moving averages, Bollinger Bands, RSI, and then I just keep adding kind of candlestick patterns and kind of trend lines to make my trading better, find better entry points. Like if you were to go and sell a put or sell a put contract after like at the top of this kind of run, and then the stock price went down and you sold the put right about here with a strike like 175, you're getting assigned shares most likely, okay? And that's fine if you like Apple and you want to get Apple in your portfolio and get paid to do so. But if you want to pick a better entry point, right, you want to kind of be selling on the way up, or you want to find a point where it kind of starts to consolidate a little bit, maybe around here, maybe in this area around 165, sell a put. Then if the price moves up quickly, your options contract, you can buy it back much quicker for more profit and rotate your capital faster. That's why the entry and exits matter. If you're just long-term wanting to add Apple to your portfolio, it doesn't really matter when you sell a put or add it to your portfolio, but we want to kind of hone in the technical analysis part on our chart reading as much as we can to pick better entry points. And we're not going to get it right every time. Like there's going to be times where you think it's a good point. Like if you kind of sold it here and like you thought 175 was a good level, it went up and you didn't take profits and it went back down. Maybe you're stuck holding the bag a bit here. Good thing is Apple's a good company. You like Apple in your portfolio and you get paid to own the stock if you're selling puts. But the better your technical kind of entry and exit points are, the more money you're going to make long-term, the better kind of trader you're going to become. So wanted to share that with you guys today with Apple. And then also we're talking about the VIX a little bit today. The VIX is hitting some critical levels here too, working its way towards it. For the past few months, we have been just kind of on a whipsaw up and down like a few weeks, and then just boom, it kind of explodes again. We had a nice kind of rip up here on the VIX when the market was crashing in February, March, not crashing, but pulling back significantly. And we've kind of been working our way back down to that kind of 16 to 20 range is neutral VIX or volatility. And we're kind of getting down there again right now. But what we have seen is that in the past, we kind of hit this level right about here. We almost got to it. Here we kind of we're jumping all around it, and we bounced higher. Right here we jumped higher on it. So to me, 18, like 18.6, 18.6, 18.5 is a critical level for the VIX. If we do end up getting down to it, it's going to be a signal to me just to go a little bit more risk off in case that we do get that bounce higher. And if we do get that bounce higher, it's going to be a time to kind of just wait for it to kind of get up to these levels here in that 25 or above range and see where kind of it's going to go. And that's when the market maybe settles down a bit. But it's getting to that point where it's getting kind of lower and lower and lower. We can expect kind of another bounce based on what's been happening over the past kind of 6 months here. If it does break down below 18, next target's about 16.5. After that, around the 15 area mark. And just remember, it's always trying to get down to 16. That's like neutral, like zeroed out delta. But sorry, VIX, not delta. I keep saying different things. Volatility, if it gets down to 16, that's kind of neutral. And the lower the volatility that there is in the markets, which means there's less premium available for option sellers. Okay, it's cheaper for people to buy options, but if you're selling options like I do and like a lot of the students do, you're not getting paid as much to sell these options, which means it's time to go a little bit risk off, in my opinion, because there could be these spikes. You don't want to sell lots of puts in these areas and then the market kind of tanks and you're stuck holding and waiting for it to recover all the way back up. You know what I mean? You want to be able to sell puts when VIX is kind of escalated, and how you get more premium. The market's kind of dropped off and you want to kind of wait for VIX to kind of pop and then go ahead and sell those puts just to kind of capture more premium and not have to worry about holding as many stocks you're getting as assigned as much. So that's how you can kind of use the VIX with these levels, kind of see what's going on and kind of target your plays based on what the volatility index is doing in the markets as well. Okay. As always, guys, if you guys have questions, throw them in the chat as we go through this. I don't have a ton left today. I've kind of been running through it really quickly and I've been doing some other stuff this morning, kind of prepping for kind of another launch for a kind of a smaller product I'm going to roll out to you guys. I'm going to keep that secret for now, but we'll talk about it a little bit later on. You might get it in this week's email. And basically want to talk about Lululemon as well. This is a big report that came out today, and they want to, or they are starting a weekly membership service. So this is huge because of a few things. Number one, first and foremost, it's a huge potential revenue stream for the business. And anytime you can add a new revenue stream, it's a good thing in my books. That's why Apple's such a titan. That's why Amazon, Microsoft, Google, they have so many different revenue streams. Disney, they make money in so many different ways. If one kind of part of their business isn't kind of living up to expectations, they can just kind of pivot and kind of make up for it with other assets that are generating cash flow for them. So Lululemon sells women's and men's clothing, activewear, right? Workout stuff. And to add that to their kind of, they have a home gym. I think it's called Mirror. And I think it's in the article as well. So they have a home gym, they have clothing sales, they have a membership kind of class or subscription service for memberships for their customers. This does a couple things. Like I said, it creates revenue, but it also, like it says, it creates loyal customers. It creates customers that are on brand in their environment. And when you can kind of bring people in to your environment, in your space, they spend more money, they feel included, they kind of work towards, they kind of have this lifestyle and brand that is Lululemon, and that'll kind of factor into other parts of their life as well. So I think this is a huge membership. They also have a free tier and a paid tier to kind of give people kind of the taste of what it could be, which I think is a great idea as well. And just, I think this is such a smart idea from Lululemon. Their stock trades at about 400, 350. Let's see where it's at right now, 390 right now. So they are a more expensive stock in terms of market price, but this just screams to me good business practice, because if you have a loyalty program, like I said, you're just building brand awareness, you're getting people further down into kind of your like brand recognition kind of value ladder, I guess I'll say. And they tested it out, and they did it for like $128 annually back in 2018. So they've gone through, they tested it out. They have the Mirror kind of, that's the home workout program that they have. And they're making things happen, right? They acquired Mirror to compete with Peloton and all these different kind of at-home kind of growth things. They have the loyalty program now. They have kind of the guys and girls kind of athletic wear. And like they say, the goal here is to create a connected community across Lululemon and Mirror. I think this is a huge kind of bonus, and it's going to cut down on the cost to kind of get new customers in the door when your friend got Lululemon. They say, hey, check this out. I had this email from the Lululemon kind of loyalty program. Send it to your friend. Boom, they get on the list, and it just lowers the cost to acquire new customers. And if you can do that in business, you set yourself up for success. Like that's a crazy advantage if you can do that. So leading into the Lululemon earnings season, if you are going to kind of be an investor in Lululemon, technically on the chart perspective, we've got earnings on June 2nd. Okay. And we're in this range. We're in this range from 377-ish, called 380 to 280, 485. And it kind of sold off with the market as well. Went through one earnings kind of area where I have to go back and check if the earnings were good. But last quarter, Q1 earnings were good, along with like the holiday season was really good. Leading into earnings season here for quarter four was really good from 2021. Q1 here, it's going to be all the sales from January, February, March of this year. Generally, people are not working out as much, or they're not wearing kind of athletic wear as much as they maybe would be going into the summer months, if that makes sense. So I don't expect earnings to kind of be blowout this quarter, but if we can kind of stay above this 377 level and not kind of dip back into this channel, I think that bodes really well for the next kind of set of earnings from April, May, June, which I think this company will absolutely crush. But with that news of the subscription service, we're seeing a breakout here over the 377 level. We saw that last week, a huge kind of move up over the 200-day moving average as well, which is a huge kind of barrier. And we've already gone through and retested it as well. Okay, we broke out. We had this nice kind of rip up, okay, around earnings. There's a nice pop around earnings. It tried a few times to kind of break out of this channel, hit the 200-day moving average like on the money, 1-2 days, kind of rejected down lower, geared up again for it. Tried to go through it, got rejected back down. This day here, April 13th, we boom, rejected and went above it. And that's a huge day. We'll actually draw that in right now as kind of an area for support there. The top of that day, 394. We're down below it today, but that's a huge level right there. The next one being the 200-day moving average. So as we're plotting these in through, what we want to see is just stay above 377, right? Hopefully we stay above the 200-day moving average. We've actually gone back down and retested and hit that. We may get there again today. This is a pretty menacing candle just because it's an engulfing candle, a bearish engulfing candle. And that means that this candle is bigger than this entire candle right here beside it. It means it's like engulfing it and it's going to swallow it up and probably lead to a lower day tomorrow, maybe to finish out the week. We'll see what happens, but hopefully we can kind of keep the 385 and stay above that. We can bounce off the 200-day again, right? Come back in here, bounce off, kind of break through this 394 area and kind of keep moving higher. Then it's like clear sailings after that. Like there's tons of potential for this stock. It was up around, I think $600 at one point at its peak. Oh, not quite, 585 or 485, $500. So there's a lot of room for it to run. This one could be in store for a nice kind of move to finish off the year, the last 6 months of the year. But we do have to also look at the Bollinger Bands right now. It's pretty extended, so it might stay in here, kind of pull back to this area and kind of base a little bit around into earnings season. So maybe for the next month, it's kind of choppy, doesn't really move too much. But as long as we stay above 377 and we gear up for earnings season and the next one after that, I think this stock is a really attractive one that I'm kind of adding or thinking about adding to my watch list based on what's happening in the news and what they're doing. And I think it's one that could maybe, I don't know, I don't want to say it, I'm a big Nike guy, but maybe I kind of mention it in the same kind of breadth and space as Nike, but like a newer kind of age of Nike for a different demographic. So who knows? We will see what happens with that one, but wanted to share that with you guys as well today. Just going to check the queue here if there's any questions. If anybody's got anything, throw it in right now. We are just about done for this week's coaching call. And again, for those of you watching on Facebook for the first time, thank you for checking it out. If you guys want to know more, you guys can send me an email at andrew@tradingoptionsdaily.com. You guys can check out www.tradingoptionsdaily.com. Check out kind of programs, different things that I offer in terms of teaching and like a training. There's some free resources there as well. If you haven't gotten through, check those out. There's some free giveaways. But yeah, every week we kind of sit down, we go through different things on the chart perspective, company news. Every week, the options elite, who are the people that have gone through the training course, get an email from me every Friday with just a market update, things that they need to know news-wise, things like inflation, interest rate rising, just how it impacts the markets, the economy, different trades that I made for the week, and kind of updated earnings announcements that are coming out, and kind of like a target calendar of things happening in the world of stock investing. So if you guys want to learn more about that, like I said, best way, just shoot me an email, and we'll talk a little bit more there. You can find me on Facebook. And yeah, hopefully you guys enjoyed this coaching call. I don't see anything in the chat, so I'm going to sign off for this week. Hope you guys have a good week of trading, and I hope you guys had a good Easter, and I will talk to you all next week.